European stocks finishing the session mixed today as Austria officially begins a new COVID lockdown today, and Germany warns it may follow suit. Let's bring in Alli McCartney from UBS Private Wealth Management. Alli, with a call here on Europe. What are you telling investors to do?
For all of the reasons that were just discussed by Mike and by Stephanie, we really believe that there's going to be an opportunity in the remainder of this year and well into next year in Europe. If you think about European equities full stop, there's basically been, at this point, a decade of underperformance. Part of that has to do with the home bias that U.S. investors definitely have. But there are three reasons we feel these stocks are really poised to run. First is market composition. Every word, every buzzword, every narrative leader that you have heard in the last day, in the last year, in terms of value, cyclicality, poised to reopening, that is the majority. That's the market composition of the European stock market. Two, you have investor positioning. UBS just did a study of its self-directed investors. It looks like UBS self-directed investors have about 3% of their portfolio in European domiciled names. Find that the percentage of the MSCI ACWI All Country World Index that is represented by Europe is 9%. So that is a huge deficit there. The third is the relative valuation, right? As of some of the mid-market closes today that you were talking about, mid-market highs today, you had a U.S. market that's trading at about 22 times forward earnings, whereas the ACWI is trading closer to 18. Now, to take this analogy even further, think about the Japanese market, right? Japanese market, the Topix right now is trading at about 14. So all of the things that we have pushing the U.S. market, accommodative monetary policy, accommodative fiscal policy, reopening trade, strong GDP and earnings, that is the same thing that you are seeing out of Europe, although they have been behind from an inoculation, from a reopening. And then I think there was further scare today in some of those closures as well, keeping people out of the trade.
So what would you do you like ETFs with European exposure? Do you like U.S. multinationals with European exposure, or just straight into European stocks and bonds?
So look, the answer is we like both. When you go into multinationals, you're also getting dollar exposure there. And in some scenarios, that's good and helpful. In others, it's not. So I think you have to do both. I think you need U.S. domiciled companies, and you need them pro-cyclical and value-oriented. So think about the same things that we're talking about in bullish on in the U.S., financials, energy, healthcare. Also think about some of the long-term themes, right? We can't talk enough about green tech. If you think about what's going on in Europe in terms of the Green Deal being the largest ever deal and source of money pushing into renewables and green technology there, and think about, again, those relative valuations. Think about the Internet of Things and Europe as a huge industrial producer and marrying that industrial prowess and heavyweight status with a digital prowess. So I think that, look, they're undervalued, they're underinvested in, and as we have capital flowing from universe to universe, this is a place that we see opportunity in the next number of months for all the same reasons we do here, but also well into next year and well beyond, when the U.S., I think, starts to deal with issues around real inflation and interest rate movement.
I'll tell you what else, Carl, what Europe's got working for it. The euro has been very weak. It went down another 0.6% today. It's down 8% for the year. Big advantage on exports.
And Alli, there was some work done today out of J.P. Morgan that easing tariffs between the U.S. and China could be an out of consensus equity tailwind. I wonder if we can extrapolate even a portion of that to what's been done lately regarding the U.S. and Europe.
I think you absolutely can. Not only the opening here, not only the continued conversations, but I think last week was actually a big moment when you had the virtual conversation with Biden and with Xi, right? That shows that what we came from in the last administration is going to be much less icy, at least slightly warmer, and that's great for global trade, full stop. So I think all of these things are pointing the same direction. Sarah mentioned the euro. I mean, whether from our perspective, whether you're talking about long-term thematic investing or whether you're simply talking about wanting to make a trade. I feel much more comfortable going into some of those large multinationals with all of the tailwinds they have than many of the ones we just talked about in the U.S., which face a great deal of headwinds.